Well, good afternoon, and welcome to the Federal Reserve's National Tribal Listening Session on the modernization of the Community Reinvestment Act. In the course of the webinar, we are going to be referring to the Community Reinvestment Act as CRA. Of the Federal Reserve Center for Indian Country Development. Vice President at the Federal Reserve Bank of Minneapolis, and an enrolled member of the Confederated Salish and Kootenai Tribes. The Center for Indian Country Development is a research institute based out of the Minneapolis Fed, whose mission is to assist tribes in reaching their full economic potential by conducting research and convening partners to discuss policy opportunities to increase economic outcomes in Indian country. In partnership with the Federal Reserve's Board of Governors, the Center for Indian Country Development and the Minneapolis Fed are playing a key role in ensuring that tribal leaders and tribal communities have a seat at the table to help us modernize the Community Reinvestment Act, a critical piece of regulation that encourages lending institutions to work with low and moderate income communities. The purpose of today's webinar is to glean feedback and to listen to your ideas and suggestions on critical questions that may shape an updated CRA and that impact economic and community development in Indian country. Just a couple of housekeeping items before we get started. There are two ways to provide feedback or comments or to ask questions. You can use the chat button on the bottom of your screen to pose questions or give comments to the panelists. So when you use chat, those comments or questions will go directly to the panelists. Additionally, you may use the raise hand feature on the bottom of the screen and we'll put you in the queue and then unmute you when it's your turn to speak. This is a listening session with questions, so please don't die. I am joined at the Federal Reserve Board of Governors, Kerry Johnson Board, and oversaw the board's advance notice of proposed rulemaking, or the ANPR, on CRA modernization. She has a background in access to credit and affordable housing policy issues impacting low and moderate income communities. Also with us today is James Colon, Program Manager at the Center for Indian Country Development at the Minneapolis Fed Act. James is an enrolled member of the Rosebud Sioux Tribe. Last but certainly not least, Minneapolis Fed President Neil Kashgari is here with us this afternoon to provide some introductory remarks. The Federal Reserve Bank of Minneapolis since January 1st, 2016. In this role, he serves on the Federal Open Market Committee, bringing the 9th Federal Reserve District's perspective to monetary policy discussions in Washington, D.C. In addition to those responsibilities, Neil oversees Minneapolis Fed operations and leads its many initiatives. In his time with the Fed, Neil has met and worked alongside many tribal leaders across the country and in the Minneapolis Fed's district on critical Center for Indian Country development topics and projects such as our work in tribal home ownership and education. President Kashgari earned his bachelor's and master's degree in mechanical engineering from the University of Illinois. He became an aerospace engineer, developing technology for NASA missions. Eventually turned into finance and public policy. He earned his MBA from the University of Pennsylvania's Wharton School, joined Goldman Sachs, and served in several senior positions at the United States Department of the Treasury, including overseeing the Troubled Asset Relief Program, or the TARP program, during the financial crisis. We're excited to have President Kashgari with us here today, and we thank you for kicking off today's listening session with tribal leaders. President Kashgari.
Thank you, Casey. I appreciate that introduction, and thank you all for being here. The Minneapolis Fed is excited to be hosting today's listening session through our Center for Indian Country Development in close partnership with our colleagues at the Federal Reserve Board of Governors. I want to thank Casey, Jim, the whole team in Minneapolis and in Washington, D.C. for organizing this session and the listening session that we had at the NCAI with Governor Brainerd in November and at the National American Indian Housing Council in late 2020, as well as the upcoming listening sessions planned for later this month. Our consistent engagement in Indian country is helping to ensure that tribal communities and tribal leaders have a voice in the important efforts we are making in Federal Reserve policy, which includes our important work to modernize the Community Reinvestment Act. The Community Reinvestment Act, which we call CRA, is an important piece of federal legislation that requires banks to serve low and moderate income communities in which they do business. It is a tool that encourages lending institutions to work directly in those low income communities, including in Indian country. The CRA was passed in the late 1970s to address the very serious issue of redlining, banks refraining from providing financial services to low and moderate income neighborhoods. The Federal Reserve is working through a process to modernize that CRA regulation to increase its utility, to increase its effectiveness in all of our communities. As the Federal Reserve works to address structural racism across many areas, we want to make sure that the tools that we already have at our disposal will be fully utilized and responsive to the needs of Indian country. Now, many communities, including tribal communities, have unmet capital and credit needs. As you may know, as you probably know, Native Americans are disproportionately unbanked and underbanked, and majority Native American counties have only 3 bank branches on average, compared with 9 for other non-metro counties across the country. From 2014 to 2018, the total dollar amount of CRA small business and small farm lending per capita in majority Native American or Alaskan Native census tracts was less than half of what it is in majority non-Hispanic white areas. 16 months ago in Billings, Montana, I had the opportunity to engage with tribal leaders from the 8 tribal nations of Montana. They expressed concerns to me regarding the unmet capital needs in their communities, specifically for housing development and economic development projects. They also underscored the important role that banks play in providing affordable credit to support Indian country entrepreneurs. Now, we know that the needs of Indian country are much larger and they go back much earlier than the CRA. But the modernization of CRA is one policy lever that we hope can increase the accessibility to financial services, lending, and change does not happen frequently. And we want to make sure we get it right, and we can't do that without your feedback we are hosting. So with that, I'd like to turn it over to my colleague, Jim Colomb, the program manager for the Center for Indian Country Development at the Minneapolis Fed. Jim is going to give an overview of the CRA and listen to your perspectives on what's important in CRA modernization. Thank you again for being here. Jim, over to you.
Thanks so much, Neil. I'm going to start the presentation now. Okay. Thanks, everyone, for joining. Thanks so much, Neil, for that introduction. Really looking forward to hearing your feedback today and also to be talking with you about CRA modernization. I'm going to start with an overview of today's presentation. So first, I'm going to provide some introductory context for the purpose of the listening session and CRA. I'll then talk about CRA and Indian country before moving on to issues being considered in CRA modernization. After the presentation, we will open the conversation to the audience. Finally, I want to note that today is not the only opportunity you're going to have to provide us with feedback. We will be taking written comments online, and so there's no need to squeeze everything in today, even though we are going to be very much looking forward to your comments. So why are we here today? The goal is to review aspects of the ANPR and hear your feedback. While the 12 Federal Reserve banks are working to gather ANPR feedback from their geographic districts, the Center for Indian Country Development is working with the Board of Governors to gather feedback nationally from across Indian country. The goal is to improve CRA as a regulatory framework that encourages capital and credit flow into all communities, including Indian country. While the details of CRA regulations can be complicated, I want to emphasize that the core issues that CRA is meant to address are serious and a practical concern for tribal communities. These 4 questions are meant to guide our discussion today. Specific comments on aspects of the ANPR are welcome and encouraged, but we don't want to miss important feedback by focusing too narrowly. What are the capital, credit, and community development needs in Indian country? What are the biggest barriers to accessing lending and financial services in your community? If your community had better access to lending and financial services, which services would be the most impactful? Finally, what has your tribal government's experience been in engaging large financial institutions on large infrastructure projects? So what is CRA and what are CRA regulations? Congress enacted the Community Reinvestment Act in 1977 to encourage banks and thrift institutions to serve the convenience and needs of the communities in which they are chartered to do business, including low and moderate income or LMI communities. Before the CRA, using a practice known as redlining, many banks did not market their lending products and financial services to LMI neighborhoods. Redlining was an infamous tool of racial discrimination, and the impacts of redlining continue to shape American economic inequality and the geography of American cities to this day. The CRA, along with a few other pieces of legislation, was meant to end those discriminatory practices and increase credit and capital flow into LMI communities. Bank examinations by the regulators, the Federal Reserve, the FDIC, and the Office of the Comptroller of the Currency, or OCC, are a key enforcement mechanism for CRA. These examinations look at where a bank makes loans. For example, is a bank not making loans in specific neighborhoods? Bank evaluations are public and include facts and data to support the regulator's conclusion. Examiners consider a bank's performance context, including demographic data on incomes, cost of living, and overall economic climate. Banks are evaluated by activities with certain criteria, with different tests for small, intermediate small, and large banks. Assessment areas are the geographies that banks are meant to serve and define community for the purpose of evaluating CRA performance. Assessment areas are the communities where banks originate loans and have physical branches, among other services. The regulation provides guidance on how banks define their assessment area boundaries. However, the current framework for assessment area definitions can leave out communities that lack physical presences from banks. Assessment areas have been a particular interest for Indian country CRA modernization discussions because many reservations are in relatively remote areas. This map shows an assessment area in western South Dakota. The red line designates the assessment area for a bank in Rapid City, South Dakota, and corresponds to the Rapid City Metropolitan Statistical Area. Several reservations are deeply connected to Rapid City's economy, including Pine Ridge and Cheyenne River, yet those reservations lie just outside the Rapid City MSA. The map demonstrates how remote communities can see less CRA impact from banks in regional economic hubs like Rapid City. The ANPR is considering addressing this limitation by expanding CRA eligibility to all of Indian country. While we recognize that the pandemic has put a tremendous strain on tribal communities and economies, we also recognize that modern tribal economic conditions are hundreds of years in the making, and that capital and credit needs existed well before COVID-19. Access to financial institutions means access to a range of investments and services, including ATM and bank branch access for tribal members, as well as larger loans for major tribal projects. Tribal nations face large infrastructure challenges, including needs in water systems, transportation, and broadband internet. On this slide, we have general examples of CRA activity, that is, activity from banks that received CRA credit that happened in Indian country within the Minneapolis Fed's 9th District, which extends from Montana through northern Wisconsin and upper peninsula Michigan. There are different kinds of activities that are eligible for CRA credit that I'll talk about on this slide. In the first category, we have grants, donations, and investments. In this category, we can have things like an investment in a native CFI or investment in a tribal community organization. In the next category, we have loans and lines of credit. This is generally, I think, what people have in mind when we talk about financial services. Here we could have a construction loan, or this is a real example, right? A construction loan to a tribal housing authority, or operating lines of credit for a tribal enterprise. The last category we have here is services. And this can take the shape of technical assistance for organizations and tribal communities, as well as financial literacy programs for people that live in Indian country. For example, a bank could do a session or a course on housing and homeownership. On this slide, we have some more specific examples of Indian country CRA activity from around the US. And the goal is to give you a sense of what CRA activity actually looks like in your community. In the first example, a large interstate bank that had a full-service branch abutting a Montana reservation closed a loan for a fee-land hunting lodge on the reservation in 2017. The bank received additional collateral from the Native American Collateral Support Program and the Montana Indian Equity Fund, programs from the state of Montana that provide collateral assistance for projects in Indian country. In the second example, a large national bank financed a new market tax credit deal for a tribal wellness center on a rural reservation. This project required sustained focus from the bank, including long-term relationship building with the tribe and attention from the bank's philanthropic staff. It required the bank to think about multiple beneficiaries. The wellness center wouldn't just improve the health of tribal members, it also created jobs and brought medical services closer to the remote reservation community. In the last example, a regional bank received CRA credit for work on affordable housing in Alaska. Using a down payment assistance capital pool, the bank supported Alaska Native homeownership in rural Alaska. Two takeaways that I want to highlight from these examples are sustained attention and innovative products. In our experience, there is a strong correlation between success for a bank in Indian country and commitment to the work, as well as the ability to use tailored tools that are tailored to the community's needs, like capital pools. I'll now transition to CRA modernization, how the Fed will update CRA regulations to strengthen the framework and provide better services to the communities that CRA legislation was meant to protect and benefit. The objectives of CRA modernization are to strengthen regulations in alignment with CRA statute, promote financial inclusion, and to ensure a wide range of LMI banking needs are being met. To update standards in light of changes to banking over time, including mobile and internet banking. To provide greater certainty, tailor regulations, and minimize burden. And to provide a foundation for the agencies, that is the regulators, to converge on a consistent approach for a modernized CRA that has broad support among stakeholders. I'm now going to dive into three specific issues that are of particular interest in Indian country. The first issue area is qualifying activities. The opportunity is to provide banks and communities with greater certainty about which activities are eligible for CRA credit, while also making sure that the regulators are focusing on the most important activities. To foster greater financial inclusion, the ANPR is considering special provisions for minority deposit institutions, women-owned financial institutions, low-income credit unions and CDFIs, to broaden consideration for retail activities in Indian country, both inside and outside of a bank's assessment area, and to designate certain activities as impactful and responsive, such as housing for very low-income households and activities with very small businesses and minority-owned small businesses. To provide greater certainty to what counts in advance, the ANPR is considering clearer definitions of affordable housing, community services, economic development, and revitalization and stabilization, as well as publication of a non-exclusive illustrative list and a pre-approval process for CRA activities. Tribal voices are essential if we are going to understand which activities are most impactful in tribal communities. Here are specific questions from the ANPR itself that touch on important issues in tribal communities. Should the board specify certain activities that could be viewed as particularly responsive to affordable housing needs? If so, which activities? In other words, what are the affordable housing needs in your community, and how can financial institutions better help address those needs? Under economic development, we're asking how could the definition of economic development be revised to provide incentives for engaging in activity with smaller businesses and farms and/or minority-owned businesses? To translate this is just how does your community define economic development, and which are the credit and lending activities that are essential for economic development in your community? Under revitalization and stabilization, how should an updated CRA exam incorporate larger essential community needs and infrastructure investments, for example, roads and hospitals? We talked earlier about how remote geographies can be a barrier to access to credit and financial services in Indian country because of how assessment areas work for CRA consideration. In response to this issue, the Fed is considering expanding CRA credit beyond assessment areas to all of Indian country. We are specifically asking for feedback on whether financial institutions should get consideration for Indian country activities outside their assessment areas. For this audience, my question is, what do you think the impact would be of that expanded eligibility in your tribal community? Lastly, I want to highlight considerations around impact scores. Strengthening CRA means increasing the responsiveness of CRA activities to community needs. Would qualitative measures of the impact of a loan or investment help attract credit and investment? Should Indian country CRA activities be scored with multipliers or other mechanisms in recognition of the needs of tribal communities? If so, which activities should be considered high impact? The goal of the ANPR is to get as much of the answer to these questions as possible directly from the communities most affected by CRA. Finally, I'm going to emphasize that there's a number of ways to share comments with us. You can fax us, you can email us, but of course, submitting comments online is the easiest way. Don't feel the need that you need to write all this down, though. We'll be sending this all to all of you in a note afterwards, and we'll also be sharing some of this in the chat later today. But the link to provide comment on the board website is convenient, and we'd very much like to hear what you have to say. We'll now transition to the discussion section. Again, while specific questions and comments about the ANPR are more than welcome, very much encouraged, we also want the audience to keep these high-level questions in mind about big picture. What are the needs in your community, and how can financial institutions better address them? Understanding community needs and challenges is essential for the modernization process. And so we're looking forward again to both technical questions about the ANPR and CRA modernization, as well as high-level comments about the needs of your community. With that, we're now transitioning to the discussion section. Let's see who's, I think, looks like we have a question from Zach Ducheneau. Are you on the line? And just to explain a little further, we'll be using the raise hand function and then using our host to call on individual attendees. Okay, there I am. Thanks, James. Hey, and Zach. Thanks to all the folks over at Casey and Chairman Kashgari. It's great to hear from you and really great to see the work on the CRA. I guess just a few comments to maybe stimulate some discussion. I won't pretend to know the specific needs of the tribal leaders that might be on the call any better than them, but I will be able to paint an overall picture from the perspective of agriculture and credit in general. And first and foremost, to highlight the importance of why the CRA needs to be revisited, redlining still happens every single day in Indian country. And oftentimes it's done with a federal government guarantee. So that's really a challenge that we've got to overcome. If you take a look at the Section 184 HUD guaranteed loan, most of that happens on non-trust land. And that program was specifically designed to mitigate risks for banks so they could serve trust land. Does not happen. It's a 9-to-1 ratio. And then it was explained that there are requirements, and there are no requirements for banks in the CRA that I can see from the perspective of a practitioner of technical assistance to farmers and ranchers all across the country. One of the banks that we have right here on the Cheyenne River Sioux Reservation has been satisfactory rated ever since 1996. In that time, their assets have went from 17 million to 71 million. And during that period, I have seen some of the things that this bank is doing to their customers. A 12.9% vehicle loan to a gainfully employed individual, a 8% ag loan that is collateralized 8-to-1. The things that the banks are doing out here
they may be serving, but are they really serving or are they extracting? So I think as we contemplate how do we improve the CRA in the future, there's got to be some what ifs if the CRA requirements aren't being met. And I think part and parcel of developing a list of requirements is an analysis of the interest rate that's being charged compared to the interest rate that's being charged across that invisible red line. That's really a critical component. Just because you're doing a 17% consumer loan in Indian country doesn't mean you're serving your community. It might mean that you're cannibalizing your community. So I would again like to thank the folks at the Minneapolis Federal Reserve and the Community for Indian Country Development or Center for Indian Country Development for the opportunity, and sure look forward to having an ongoing dialogue about how we can make the CRA serve more appropriately as a tool that levers financial resources towards the needs of our Indian country communities.
Thank you, Zach. And I really appreciate those comments about interest rates. I mean, in the long term, if Indian country is going to catch up with the rest of the country, right, it can't be hobbled by excessively high rates. It's going to continue to handicap our tribal communities. So much appreciated and important context. We've got a question, unless Carrie had any comments on Zach's words, we've got a question here. There may be some confusion in Indian country on the CRA, since we have heard there has already been an effort underway to revise the CRA. The Office of the Comptroller of the Currency has put out rules that do address Indian country. Can you tell us about the Federal Reserve's current efforts and how this relates to what has been released from the other banking regulators?
Yeah, and so I can cover that one. And so I guess the thing to say at the outset is that the board's goal in issuing the advance notice of proposed rulemaking that came out in September of last year is to create a foundation for a consistent approach across the regulators, and that has the broad support of stakeholders. We've heard very loudly and very consistently and very clearly from all stakeholders the desire to have that consistency across the regulators. And when the board issued the advance notice of proposed rulemaking back in September in an open board meeting, several, if not all board members really emphasized that desire to get back to a consistent approach. So it's something we're very mindful of. In terms of the board, the advance notice, I get a lot of questions about, well, what does an ANPR mean exactly? And so it's a tool for the board, the Federal Reserve, to be getting comments and feedback on ideas and issues that we know are really important and very significant as we consider next steps on CRA modernization. There's not an immediate deadline or an immediate new set of regulations that would take effect for banks supervised by the Federal Reserve, since this is an advance notice of proposed rulemaking. So for the board's purposes, we're at the beginning of the rulemaking process. The other thing I think to emphasize in talking about where the Federal Reserve is on CRA modernization is that the issues and the proposals reflected in the advance notice of proposed rulemaking really reflect what has been a long series of conversations and stakeholder feedback and engagement across the agencies. So I think there is a shared view about what some of the common objectives are in terms of CRA modernization, and a shared understanding of what some of the challenges are in terms of improvements to CRA modernization. And we very much have benefited from that engagement with the other agencies and from stakeholders. But we know that CRA is such a critical piece of community infrastructure and engagement, and affects communities significantly. And so we're really looking to make sure that we get CRA modernization right We know it's critically important to get CRA modernization right. And so I'm really happy to be here and have a chance to hear feedback from all of you. And hopefully also, again, just to echo what Jim said on the comment letter deadline is February 16th, and really also put an extra plug in terms of providing us with that written feedback. I can't emphasize enough how important the feedback is to our process.
Fantastic. Thank you, Carrie. A great reminder about the deadline as well. Just a reminder, if you've got any questions, I see we've got a few in the chat, but submit any questions you have, including follow-up questions to these topics, or raise your hand to be put in the queue for audio or video comment. Looks like we've already got Robin Danner queued up. Are you? Hello, Robin.
Well, good morning, James. Can you hear me okay?
Yes, good morning.
My name is Robin Poinani Danner. I am the elected chairman of the Sovereign Council of Hawaiian Homestead Associations, which is focused entirely on our trust lands, our 200,000 acres of trust lands in the state of Hawaii. I also serve as the national policy chair for the Native CDFI network, serving American Indian, Alaska Native, and Native Hawaiian financial institutions. I'm a former banker, so I remember the panic when CRA first became a policy initiative. So I just really want to thank the Federal Reserve and the amazing work being done under this ANPR. It's very noticeable in this ANPR, the inclusion and attempt to be focused on Indian country, which includes Indian allotments and of course Hawaiian homelands, which were created in the same policy era in the early 1900s. I want to echo also Zach's comments about redlining happening every single day. It is an absolute truth. He mentioned HUD 184, and out here in the 50th state, perhaps the bluest state, they like to say, but we have redlining going on under our HUD 184A program, where specifically farmers and ranchers are being denied by our own federal government from even applying to the HUD 184A program. And we had to do enormous amounts of work to send our own federal government their own statute and regulation that showed that farming and ranching trust lands are completely eligible. So part of the problem is CRA examines the private sector, but doesn't examine its own agencies that sometimes are the source. So I just wanted to echo Zach's problem and or his comments, because as the pandemic has shown, food sovereignty and food production is a crisis, and we really need capital to be flowing to our farmers and ranchers. And then, James, you'd said the number one challenge to getting banks to invest in Indian country, and I use that term in terms of trust lands specifically, frankly, it's not as complicated, and maybe it can't be measured by exams and percentages of portfolios. And that challenge is that we have, in 2021, we have a complete lack of sufficient knowledge about trust lands by the financial institutions. I think, I don't want to put words in Zach's mouth, but I followed his sentiments that if a financial institution wants to ignore trust lands because it's maybe 10 more steps, or it's a little more difficult, or it's not an understood comfortable area, I think CRA needs to not measure by percentages and incentives, but maybe it's time for our CRA to lay down minimum requirements. And what I mean by that is that perhaps certain areas or banks that are in one of the 35 states that actually have Indian country in them, if your bank is in that state, then it's a minimum absolute requirement that your bank have a trust land advisory council with tribal leaders on that advisory, and they maintain it. Because the only way to cure the lack of knowledge and comfort about our lands is not a one-off seminar. It really has to be in relationship building. So I know that it's not the fancy, sexy exam criteria. It's far more basic than that. But the experiences that we've had is that if a bank doesn't want to loan on our Hawaiian homelands because they don't have all the information, they just don't, and they can still get major scoring along those lines. So that would be my minimum comment. So small, but major impact. What we've seen in the last 2 decades is Federal Reserve banks themselves trying to educate about Indian country. And I think maybe we should position CRA and banks that are in any of those 35 states as being educated and building relationships the way we do it in Indian country, which is not one-off workshops, but rather long-standing abilities. I mean, I can just imagine in my mind's eye someone as talented and knowledgeable about farming and ranching, for example, of Zach, being on a financial institutions advisory board about trust lands, not as a one-off, but as a long-term relationship. So that would be my comment there. And then finally, I just want to say again, I've not seen an ANPR that has focused or mentioned the words Indian country as much as I have in the current version. So I definitely want to thank you and the Federal Reserve banks for that noticeable increase in dialogue. Mahalo.
Thanks a lot, Robin. I think those are all fantastic comments. I want to focus for a second on this issue of bank knowledge. That's something that's come up repeatedly in my time at the Federal Reserve. And sort of the first question is, does the bank have experience and knowledge in Indian country? Which again comes up so often that a fair question that we often get is, to what extent is it an issue of knowledge, and to what extent is it an issue of interest and commitment, right? And I think if we're going to say that banks have a duty to serve Indian country, I think it's absolutely fair to say, do they have a duty to understand the basics of Indian country law? Unless any of my other colleagues had more comment on Robin's contribution, we can go to the next question.
Hi, James. Can you hear me?
Yes.
Hi. Thanks for acknowledging my raised hand. I would add to the previous comments or made, particularly focusing on the sort of a general lack of knowledge and understanding, both in the banking community and at the regulatory level. And let me just give you, if I could, a couple of examples of things that I've experienced in the years that I've worked in Indian country, both on the lending side and the Indian lands title side. For a number of years, I represented a small lending institution that committed itself to working very hard to help tribes develop commercial income producing, job creating projects in Indian country. And actually, I work with a number of small institutions. They were local institutions largely. And sometimes one of the bigger banks would get into the mix. And I think that in part because they believed it would give them a little bit of a gold star, if you will, on the CRA side, if they said, oh, yes, we have an Indian country department or an Indian law department or whatever. But they were less likely to have the relationships, at least in my experience, with the local tribes than the smaller bank or the local banks did. But what I saw happen a number of times, which was distressing, is that my clients would enter into lending agreements with tribes or tribally owned entities, generally based on or generally backed by a government guarantee. And then when it would come down to the bank getting examined, a number of, if not all, of their Indian country loans would get written up. And so the examiners would come in and they'd make the bank classify, because the loans were considered to be, if maybe underperforming or not as strong as they should have been on the credit side based on quote typical commercial standards or whatever the reason. So what the banks ended up having to do was to reserve against those loans, which of course no bank wants to do because it takes capital out of operation. And the people making the loans in the bank, the actual guys out in the field with the relationships, certainly do not get a particularly pleasant look from their superiors when that happens. So that was a disincentive. And I saw it happen over and over again because the examiners didn't understand what they were looking at. So that's a regulatory issue. So that's a knowledge issue as well, it seems to me, on the regulatory side. On the other side of the coin, and we talk about interest rates and issues like that in Indian country. Part of that is the nature of the land and the nature of trust land, and the making a loan secured by an interest in trust land or restricted land is more difficult because of the federal involvement in the process. It takes more time, which makes it more expensive. It takes more manpower. In a government guaranteed loan, it takes much more manpower in just servicing the loan. And so those are all disincentives to lenders. Really, I'm talking non-Indian commercial lenders who would be subject to the CRA, to really digging in and wanting to go out and become very active in Indian country. And so I think that there are some real issues with the way trust land is administered. There are some real issues with the way trust land is accounted for in terms of land records. And there are issues on the federal side with regulators not knowing or not understanding the land. And then I suppose one last thing that I think becomes a disincentive, and I don't know what can be done about this, and I'm certainly not, please don't take my comments as being critical at all. I mean, I think they're just this is a reality. When banks lend in Indian country, when they lend, period, they really want to know the playing field. They want to know what the law is that controls. They want to know what the foreclosure or the remedies possibilities are if they have to exercise remedies and so forth. And to the extent there's anything unknown, it is a disincentive, so scary, if you will, for banks that are, I think, just inherently conservative. That again that issue can be mitigated. And I've seen it mitigated over and over again by building relationships. I don't think that those relationships can be forced, however. I also don't think that requiring banks within a state in which there is Indian country or land or tribal land or individually owned Indian land to make a certain number of loans in Indian country is realistic, in that in some places there simply isn't the demand. One example, just get a little off the wall, but we saw back in the mid 2008-ish when TARP, when we had the recession and there was a lot of TARP money and also TED bonds and so forth. At least one of the government guarantee programs with which I'm familiar, had all the ceiling, and its charge was to make a bunch of, or to underwrite and to guarantee a bunch of loans. The market wasn't there though. Nobody was lending. I mean, the banks were pretty much shut down. Everybody was, kind of really, really locked down. And in that instance, that particular agency was heavily criticized for not guaranteeing loans in Indian country when the need was there. Well, it couldn't because nobody was lending. And so again, that kind of thing is a lack of communication, and it's a lack of understanding. And I absolutely agree that one seminar doesn't do it. I've been working in this space for 3 decades now ish, and the same issues exist now that existed 30 years ago in one form or another in many instances. And the relationship building and the consistent integration in the conversation of Indian country and Indian country's needs and understanding of the banking side, lending side, and just understanding all the way around is critical. And that, if it could be promoted, would be, I think, a tremendous help and go a long way to addressing the issues of a lack of capital in Indian country, because I think there'd be more understanding, and that would bring capital in, I believe. So thank you for letting me comment. I appreciate it.
Thank you, Nancy. This is Casey, and appreciate you taking your time and providing some of your insights, and certainly for your leadership on the Center for Indian Country Development's Leadership Council. I appreciate your service on the council. You know, I just wanted to just weave a couple things together as it relates to a few of the comments so far. A couple of things that I've heard is lack of communication, the limited understanding of doing lending or providing for financial services in, on trust land in particular, and the complexities there, and some opportunities for deepening relationships between lending institutions and tribal entrepreneurs and tribal governments, tribal communities in general. And I don't know if it fits neatly into the work that we are doing with Cra Modernization, but one of the comments that, where I think we can weave in and get additional perspectives for modernization is there have been lending institutions that have invested time, energy to build their understanding, to deepen those relationships with tribal communities, and have done a good job in pockets of providing financial services and credit to Indian country. And, as a part of this learning process and feedback process that the Federal Reserve is going through, we highly encourage those lending institutions who have found significant success in working consistently in Indian country, for those lending institutions to provide direct comments of how they've prioritized their work in Indian country, how they've been able to address the particularities in gaining CRA credit or not, and how that's motivated their work in providing services in Indian country. Because I think there is a lot that we can learn from those particular institutions that might shape how we respond to feedback from the ANPR process for CRA. So I think both Nancy and Robin and Zach's points are very much appreciated, and I think there's folks that we continue to engage with to learn and get feedback so that we can make sure that Indian country has a voice as we're modernizing CRA.
Fantastic. Unless anyone, I don't know, Carrie has something to add, we've got a question in the chat from Jonelle Yearout that I have a quick response to, and then I think maybe Carrie will have some comments. So the question is, is there a way to find out the history of a bank in terms of its CRA activity in a certain area? For example, a reservation or traditional homelands. How is that indicated in the report? Is it specifically indicated that they are doing CRA activity in Indian country or not? Janelle also says this would really help with research for her tribe. And what I wanted to say here is I think this is a great question, because if we're talking about CRA being more accountable to Indian country, that should be trackable, right? And so I guess passing this question to Carrie with maybe the added question of how is public reporting potentially going to change in the ANPR?
Yeah, so as you guys know, CRA is obviously unique in that banks' supervisory evaluations are public. And so each of the regulators has every bank's CRA performance evaluation available on its website. On the Federal Reserve's website, you can search that by state, and I think also by time period. But really, to get at the heart of your question is about two things, really. One is what information is actually in those performance evaluations, and then second, how do you get a bigger picture, a more global picture about what is or isn't happening? And I think the answer on specifics in performance evaluations, I think, is probably that it depends. So obviously, there's a lot of information in CRA performance evaluations, including aggregate data about a bank's retail lending, or if they're also evaluated for their community development activity. An examiner would explain particular activity that they might have found to be impactful or responsive to community needs and talk about a specific activity. But I don't think it's the case that each and every transaction, would be individually described in a performance evaluation. So I think the answer on individual performance evaluations is it depends. But the other part of your question about how do you get that bigger picture view is something we have been thinking a lot about, just in general, as we think about our role in overseeing CRA exams, but then specifically in more time sensitively around CRA modernization, because we've really wanted to be very data driven in terms of how we think about CRA modernization proposals. And we have spent a lot of time and effort on building a data set that extracts some of the data that's in performance evaluations. But part of what you're asking about, I think, goes beyond even the data that we've tried to extract from performance evaluations. And I really do think, this is me personally speaking, but is something for us to give serious thought to going forward about. There's all this information and individual PDFs on the websites, and how do we think about how to leverage that information so we have an understanding as we're thinking about how CRA is working across the board, and how do we do that? One thing the ANPR really asks for feedback is how to balance that need for data and the greater clarity and certainty that can come from data with the data burden that can be posed sometimes on institutions. So we've really asked for feedback in the ANPR about how to balance those objectives. But I really appreciate the comment and the question, and I think it gets at a really interesting issue in terms of how to think about all that information and the individual evaluations.
One more thing I'll add, now that I think about it, is at the center, as we engage in economic research and work with practitioners, we've definitely built an appreciation for practitioners wanting data, right? Indian country is often described as a data desert. And so even beyond the context of CRA, I think this is an important question. Next, we have a raised hand from Dave. Dave, can you introduce yourself? And it looks like Dave's on the line.
Okay, hello, James?
Yes, hello.
Oh, great, okay. So Dave Castillo here with Native Community Capital. We're headquartered in Laguna Pueblo in New Mexico, and really appreciate the previous comments. And with regard to the data, I was struck by the fact that, the examinations aggregate data, and if there was a way to disaggregate the data so that there's clarity and transparency around what a bank is or is not doing in Indian country, so at least we have a clear record of when a bank is making an effort and not. Secondly, I also serve on the Native CFI Network Policy Committee, and I think it's, well, with regard to multipliers that was mentioned, I think, this idea of relationships is significant. So we're in line to get our COVID vaccine. And so with regard to that multiplier idea, I think that's a much better incentive than a kind of a floor, right? Because the relationships need to get established. And I think the problem with CRA is that sorry, taking instructions.
Thank you.
The problem with CRA is that it's a compliance matter that banks must navigate and negotiate. And in contrast to their profit-making and safe and prudent lending practices. And so when you put the two together, there's going to be an interest on the business goals as opposed to the compliance, until such time as the compliance goals possibly come back to bite them and to affect their performance, right? I mean, we've all been in a situation where a bank kind of gets close to the end of the year in their compliance, and all of a sudden they're real interested in tribal deals.
You move to the other side. Okay. Are you getting your first or your second shot?
Sorry, folks.
Second. Please read this for me and let me know if there's any yeses.
And so, yeah, we're in a COVID era. Sorry about that, folks.
Can we switch now?
And so the issue is there that I think, providing double or triple bonus, points, if you will, to banks that make an effort to work in Indian country may be, more of a carrot that would encourage them to throw the kitchen sink at the problem, because we're talking about not just an investment that complies with safe and prudent practices, but that really goes to affect the, building or rebuilding the infrastructure that's needed to have a deal that is going to perform to the bank's standards and the regulators' expectations. In that case, then, we don't need just banks looking for the best deals. We need banks creating those relationships and doing the hard work to help tribes and organizations like CDFIs innovate on how to improve the infrastructure so that we can have a better, better deal flow. So those are, I guess, the two main points: is the data and what that tells us and what it could tell us if it was disaggregated. And secondly, how can we really incentivize banks that, must comply with safe and prudent practices to make a bigger investment? Sorry, thanks.
Thanks, Dave. To be totally honest, if I had it my way, we'd all be getting vaccinated while on this call. So totally understand, and congratulations. I'm glad to hear you guys are being taken care of out there. No, those are great comments. And I think this multiplier issue is something we very much want to get feedback on. I don't know if Carrie or Casey, if you had any specific remarks on in response to Dave.
Yeah, I can chime in a little bit. That's really helpful. I can say in the ANPR gives a lot of thought to not just what activities qualify, but really having a line throughout the ANPR about how do you think about evaluating the impact of activities on communities, and how does the way you recognize impact on communities actually translate into a bank's rating at the end of the day. And so through a lot of really helpful feedback, that is something that I think we've given a lot of thought to and is reflected in the ANPR, and really very much want feedback on. I think that the ANPR puts forward a couple different ideas in terms of how to measure that impact or reflect high impact activities. And the ANPR proposes something we call an impact score that would be separate from a metric. It'd be sort of there in parallel with the metric to reflect high impact activities. And so that impact score concept is something we're really very interested in feedback on. We also asked for feedback on multipliers. and how might we go about thinking about, what methodology would we use in terms of thinking about multipliers and what impact that would have on a metric. And we talk about that particularly around community development activities, and how to think through, a methodology that's looking at high impact activities in a bunch of different dimensions. But really appreciate the comment and the feedback.
Next, we have a question from Rebecca at USET Economic Development. And the question is just about what is the relationship between the Fed and the OCC, especially when it comes to CRA? And I think, Carrie, this would be a good one for you.
Oh, sure. So CRA supervision is shared across 3 different agencies, the Federal Reserve being one of those. So the Federal Reserve, the OCC, and then also the FDIC all have responsibility for supervising CRA for each agency has a different set of banks where they supervise CRA compliance. So different agencies, and like I said at the outset, in terms of what I said, the Federal Reserve's objective in putting out this ANPR is to set a foundation for a consistent approach across the banking agencies on CRA modernization.
Thanks, Carrie. We now have Ian Record with his hand raised. There's Ian on the line. Hello, Ian.
Good afternoon, James and colleagues. Ian Record with the National Congress of American Indians. I also serve as an ex officio board member for the Native CDFI Network, and I wanted to affirm everything that's been shared by the others so far. I know you mentioned early on that the Fed is very early on in the CRA modernization process, and that obviously most of the energy right now, I would imagine, is focused on how to redesign the regulations to make them actually work for Indian country. And I just wanted to flag a couple of thoughts I had on implementation to make sure that that banks and tribal nations and individual tribal citizens are on the same page on this. I know that Nancy rightfully pointed out that you can't force relationship building between banks and Indian country, but I think there are some ways to facilitate it. I think, considering the creation of some kind of pilot program that would partner banks with tribes to have them implement together the new CRA regulations and then meticulously document their initiatives and then share those out with banks in any country. I think that would be very helpful in reducing risk by increasing lending institutions' familiarity with the intricacies of doing business and offering lending in any country. I think another thing related to that is, as you guys do the rollout, to educate folks about the new regulations, what they mean for Indian country, is to, where possible, is not to segregate your audiences. Not to do certain type of education for banks and then a different type of educational efforts with Indian country, but try to bring them together to kind of build that cohesive audience where that relationship building can begin to take place organically, but much more aggressively.
Thanks,
I
Ian.
really appreciate those comments. I think, and sorry, Jim, I didn't mean to cut you off, but just to say, I think CRA's so unique in terms of the intent and really being grounded in community feedback and community engagement. And I really see that as being at the core of CRA and its core purpose. And so very helpful thoughts and feedback.
Another question I think would be good for Carrie is, we've covered some of the key issues that have the most attention in Indian country, right? The qualifying geographies, the issues that really get to the heart of it. But are there other aspects of the ANPR that aren't necessarily targeted towards Indian country that Indian country should be thinking hard about, or that could potentially have a big impact in Indian country?
Yeah, honestly, my answer is all of it, because my experience is that everything in CRA is connected to everything else. So how you define assessment areas and where banks get credit for activities ties with the ANPR talks quite a bit about this idea and some proposals around how to use metrics to potentially evaluate bank CRA performance, metrics both for retail lending activities and banks for community development activities. It's all tied in together in terms of what activities are eligible for CRA credit. And something the ANPR discusses in one area, for example, is, so if we're proposing to use a metric to evaluate or help evaluate community development financing activities, what do you do about the fact that, you know, some activities are going to have a larger dollar amount versus others? How does that relate then to this idea of an impact score, which potentially could look at the impact of some smaller dollar activities? And then how does it all translate into ratings? And so I perhaps that's an unsatisfying answer because it doesn't sort of reduce it down into a specific list, but I really do think things in CRA are all interrelated. And one of the other things that I'm always struck by with CRA is just how many different activities, how many important issues, the breadth of what CRA is intended to capture and evaluate in terms of bank activity and community needs is really, as all of you know, very broad. So you're not just looking at housing issues, you're also looking at housing and economic development and a host of other issues. So the ANPR definitely has specific sections that are specific about proposals around Indian country, but I really do think it's all very much related. And one thing to also just say is I think that the process of putting out the ANPR, you know, is a very humble one in terms of really very earnestly asking for that feedback about what have we missed, what seems like it might be a good idea, what connections should we be thinking about between different parts of things. It really the comments and the feedback and the conversation today are really very helpful.
That's great. And I think, okay, we've got a question. Okay, we've got a question in the chat actually that I don't know the answer to. What provisions in the ANPR are intended to incentivize increased partnerships between banks and credit unions? And I think this will be our last question for the day.
Yeah, so there's a set of proposals in the ANPR, not just about credit unions, but about mission-oriented financial institutions like CDFIs or low-income credit unions or minority depository institutions. And the ANPR asks for feedback and about how to think about providing incentives for activities in partnership or working with MDI, CDFIs, and these mission-oriented financial institutions. And that discussion is also really tied to a discussion in the ANPR about racial equity issues, reaching underserved communities, and really thinking about that as one strategy among many in terms of thinking about how to ensure that there's incentives and activities focused on reaching those underserved communities and thinking about issues of racial equity.
Great. Okay, well, thanks so much for all of the comments. These were fantastic. Really appreciate all of you coming out here today as we work on CRA modernization. And lastly, I just want to say, this is not the end of your opportunity to give us feedback, right? We're in the ANPR, next will be an NPR. There's going to be, this is not the end. And with that, I'm going to share my screen again, information about how to comment. I think the easiest way will be to go to our website and provide written comments, which we really encourage you to do. We'll be digging into those very carefully. And thanks again for coming, everyone.